Hi, I'm Vicki Gile, and I'm here with Tom Gile and Shane Musselwhite. Shane's with Oregon Home Mortgage. We're obviously the Gile Group.
Yes.
And we are here today to talk about buyers and sellers in this market, how we can help them, who's buying, who's selling, especially when it comes to interest rates. We all know that that's kind of a question in today's market, and who's really looking to buy or sell. And I know that one of the things that I had talked about was when we had interest rates that were historically low, insanity low, everybody refinanced.
Yeah, true. Yeah,
so your typical downsizers, your typical people who are like, oh, maybe we'll make a move, have kind of gone slow. And that's kind of what the media headlines are talking about. Oh, everything's quiet down. Yeah. But that's not the reality, because buyers and sellers are out in every market. May not be in the same numbers, but they're out there in every market. So who are we seeing that's out there buying and selling?
Yeah.
And
so kind of along those lines, looking at it, the media would have you believe nobody's buying.
Yep.
Like,
or it's all locked up.
It's all locked up. No,
it's definitely lower numbers.
It is. Yeah. But if we look at kind of where we're about 25% below 2022 kind of year to date
numbers
volume wise. But the interesting thing about it too is if you look at the last month compared to the same month last year, sales are right on track. So the market had slowed down by this time last year.
And historically, at this time that we're actually recording this, it starts to get to be a slower time.
But also kind of looking at who I've worked with over the last 6 months or a year, it's mainly been people moving to this area, and they're moving here for a couple of reasons. They're moving here for jobs, but mostly I've got people moving here to be near their grandkids. I mean, that is kind of the market right now, at least for me. I'm getting a lot of buyers right now moving here to be near family.
Yeah, absolutely. Yeah. Absolutely. And one of the other things that I look at is investors. We've worked with a couple of investors of late, and investors always seem to be in the market. No matter what kind of market, they're in different ways, but they're usually looking to either, capitalize on the market or sell something off because they're done, or, there's a myriad of reasons for investors, but investors is definitely one. Yeah. And then I think the unfortunate side of it, if we have a parent who is aging or who has passed away, and they there's a house that needs to be sold, so that's one of them. Divorces also.
I have a client right now that just completed a divorce.
Yep.
And she's buying a house on her own.
Yeah.
2 recent closings on people that were relocating for work. They weren't relocating to Oregon, but they were tired of the commute that they were making.
Yep.
So they made a decision to buy and sell closer. And one of those was a multi-generational household.
Yeah.
So, bigger home, needed room for mom and dad.
Yeah.
Those types of situations.
Yeah. I think COVID really was something that really had people thinking about how they wanted to live. People are going back to the office, and so some of them, not all of them. Yeah. So the telecommuting piece, if they actually have to go into the office, like you were saying, to be closer to work, that's something, because that time with family of driving longer than you wanted to, time was important. Yeah. And certainly multi-generational is one of those. We live multi-generationally, and we'll be doing more on that, because that is an option for buyers in this market to maybe pool resources, or if you have an aging parent, you need to live together. We help with grandchildren. Just this morning, got our grandson off to preschool. Yeah. Yeah. Our daughter went to work, and we can easily do that because we all live in the same place. And so multi-generational is interesting. Yeah. Qualifying for multi-generational and pooling, is there a lot of challenges with that, or?
There's really not. It's not any more complicated than a married couple buying a property. You're just taking the resources and income of everybody that's going to be on the loan.
Right.
We frequently close loans where people are on title as an owner, but not obligated on the loan for one reason or another.
Right.
But certainly, if you've got income from multiple sources, you're just going to have multiple applicants on the loan. So it's not really complicated from a lending standpoint.
Okay. Yeah, and obviously then I think another buyer is the one that's just qualified.
Yeah.
Right?
Yeah.
A buyer who in this market is just simply qualified to buy, and we need to help them find that property as well and walk through the process, because, we all purchased at higher interest rates. The 3 people sitting at this table all purchased at higher interest rates. Yeah. Back in the day, my very first place was a 9% FHA loan.
Yeah.
So, and that's, we're not
Yeah.
too far from that right now. But my point, but that was the low, right? That FHA 9% was the low interest
mine was
rate.
a little over 12 when we started.
Yeah.
Wow.
Other recent closings, people that found just the right house.
Yeah.
They'd been searching for a long time. They had the capacity to do it, and just the right property popped up, so they were willing to move ahead.
Yeah.
Believing, like we all do, that at some point in the future there's going to be an opportunity to improve their rate and payment by doing everything.
And we know.
Yeah.
Historically, all we have to do is look at history, right? I mean, it ebbs and flows. Life ebbs and flows. Interest rates ebb and flow.
Yeah.
It doesn't have to be. It's not perfect. There is no perfect. So it's just, are you qualified? And again, us all finding those people to help do those things. I'm a senior real estate specialist, and so I've done many people who unfortunately have someone pass away, or they're just simply relocating their aging parent from one place to the other, either in a multi-generational situation or an assisted living. And I have the resources and the experience to help people walk through that difficult process. And it really is a difficult process, an emotional process, and we try and give them steps at a time to walk them through. So.
In the entry level or first time buyer market too, I remember when we bought our first house, I was scared to death.
It's terrifying.
And now, like most people, when I look at what we have in the way of real estate equity between a couple of properties, it's a large portion of our net worth or what we're going to carry into retirement with us. So the idea of being prudent, but being a little uncomfortable, that's kind of how you get going.
It is.
I remember the analogy, if you wait to have kids or buy your house until the perfect time, you're never going to do it either.
That's right. Yeah, you'll never do it.
That's part of the education process.
Yep. Education process is huge for all three of us. On the buyer end, I do buyers and sellers, and on the mortgage end, it's free to get information. We've said this 1,000 times. It's never too early to talk to any of us. We want to give you the information because you as a buyer or a seller, even sellers, we do this every day. So they don't know the process, and we want to share the process with you. And you may think this is impossible. I can't do this. But then if you get information, you realize, well, maybe I can. Maybe I can do this. And maybe I don't do it tomorrow, but I do it 6 months from now, or I do it a year from now. This is part of the process, and we want to be a part of that process and be able to educate. That's absolutely what we want.
It doesn't have to be immediate gratification. We did kind of move into that for a while, where everybody wanted something and they were able to get it right then. Kind of led to the crash we dealt with in 2008. Lending's a lot more prudent at that now, but when I started 30 years ago, you always had a drawer of files of people that were getting ready to buy, and they might be a year down the road, they might be a year and a half down the road.
We absolutely want people who are going to be ready to buy and ready to sell 6 months, a year from now. We touch base with our clients. Most of our business, I can speak, most of our business is repeat and referral business, so we're always keeping in touch with people on a regular basis. You might not be ready now, but you will be, and we want to be a part of that. So, I think that's just a little snapshot about what's happening in the market and who's in it currently.
So we've kind of identified who's in it, but what can we do as professionals to help these people, especially some of the challenges? I mean, some of the challenges I think people are facing in this market. Interest rates, people are being. One is it's more expensive, but two, I think there's a big psychological piece of that too. It's just people see a number and they're like, oh man, I can't be in this market because of the interest rates of what they are. I think as professionals, I think there are options and things to do, and it's our job to help bring that information to people.
And I think showing the numbers is super important.
Doing the numbers for people. I mean, there's no getting around the fact that there are certain people who are temporarily priced out of the market because of where interest rates are. I think there's a lot of people that are qualified to buy now. We just need to be able to show them what are the right reasons to be buying right now. The market's not as competitive as it was from the buyer-seller side when rates were lower. That insanity will come back when rates drop. So we're seeing more deals where the seller's willing to help with closing cost or maybe an interest rate buy down.
For buy down,
like that.
Absolutely.
So it's more education. I mean, yes, our buyer pool is a little bit smaller and impacted by rates, but beyond that, it's still just a matter of knowing all the tools. Changes going on in lending. I closed a loan 2 days ago that if the client was making application in January, she would not have qualified. So a little bit of tightening on a Fannie Mae program or guideline when it comes to rental income on the home she was moving out of and keeping. But we're also seeing expansion, like effective in 8 days, you can now buy up to a fourplex with 5% down if you want to live in it.
That
awesome.
was
a 20 to 25% down payment requirement prior to this change.
Yeah.
So that's kind of the lending arena recognizing the challenges in housing and trying to take prudent steps to make it more available to people.
It's interesting because I do have some clients that are looking for duplexes, and that's huge.
Yeah,
a lot of first-time home
that could
buyers.
be a game changer really for someone doing that.
It really could. They have to understand how the rental income is calculated off the other side and how it's part of the qualifying piece. But that's a really positive change.
Yeah.
We're still dealing with, of course, loan limits, what those dollar amounts are, and sometimes we can bump up against those in our marketplace. You had asked earlier about the change to FHA in allowing ADU income for qualifying, which they just made a change to do. But do keep in mind that loan is still priced as a single-family residence, so you're still up against the single-family resident loan limit in our market, which is like, 641 and change, I think. So,
right.
Yeah.
So let's talk about buy downs. I mean, we hear about them all the time.
Yeah.
We're seeing builders offer buy downs. We're seeing sellers offer buy downs.
Yeah.
Buyers inquiring about buy downs.
Yeah.
I mean,
Everyone.
Yeah.
We actually
lots of talk about buy downs.
Lots of talk about buy downs.
We actually have a client under contract on a new construction, and the new construction actually offered a $25,000 credit.
Yeah. Builders are anxious to move product.
Yes, they are, because and that's part of it, right? That they're seeing the lower numbers, so there's opportunity out there for that as well. And some of that money went to buy down for sure, and it was helpful to them.
Yeah, buy downs have been around forever. They've been around my entire career. Years ago, we used to do them. I wouldn't say regularly, but they were more of a thing, and then they kind of fell off the radar. They've been talked about a lot more lately because rates have gone up and the market slowed a little bit. No magic to it. You've got an amount of cash to work with, and you can use that to buy the rate down by paying the interest differential for the buy down period out of that money. We always want to look at it closely. Is that the best use of it? Again, still believing that people are going to have a refinance opportunity within the next few years. A temporary buy down is probably the most appropriate use in a lot of cases after we've covered other closing costs. A positive change is that lenders, it used to be that if that money was set aside for a buy down and that loan paid off before they were all used up, those funds were gone. The lenders didn't rebate them. Lenders are now rebating any unused portion, so it's a credit towards the payoff. So it makes it a little bit more safer from a money management.
Yeah,
That's
so is
good.
that, I hear things like a 2-1 buy down or a 3-2-1 buy down. What are those, and what is that?
So a 2-1 buy down, let's say for example you qualified today at a 7 3/4 interest rate.
Okay.
A 2-1 buy down means for the first year you're going to pay 5 3/4, so it's 2 points below your full rate. The second year you're going to pay 6 3/4, and then you step up to the 7 3/4. 3-2-1 costs more money, obviously, but you're buying that rate down to 3 points below the qualifying rate for the first year. And it can be significant savings off of people's budget and monthly payments.
Absolutely.
It does not help with qualifying.
No, you have to always be able to qualify. Qualifying is to me, I think even buyers understand. I have to qualify for the loan, and honestly, that's the piece. One of the biggest pieces they don't know first.
Think about somebody who's in an apprenticeship for a trade. So they're on a schedule of increases in income. They know what's coming as they move through that apprenticeship. They might not be comfortable taking on that full rate payment right now, but if the rate moves up over time as their income moves up, it's something that might work for them.
Yeah, I think that's an interesting piece because you're saying it costs a little bit more, but also in the market, maybe, we work with the seller and get some, money towards that too. The goal is a win-win, sell and buy. So if we can make it work for everybody as a win-win, that's a good thing.
Is a 2-1 or buy down like that, is that more expensive than just hey, I'm just going to buy down my loan?
Well, really good question and not easily answered.
Yeah.
So when
of course, that's why I asked.
And people don't really know this. When I price a loan, I get a rate grid. So I see all the rates available for that specific scenario. So you could take that money and say, okay, how low could I buy this rate down for the term of the loan, for the full 30-year term? We wouldn't look at it as one being more expensive than the other because the temporary buy down is just that, it's temporary.
Yes.
And there have been equations where it made more sense seemingly to buy the rate down for the entire loan. That gets to be a judgment call right now, because if we believe people are going to refinance in the foreseeable future, and I would never put a time frame on it because all the market makers have been wrong the past couple of years. But if we believe that is coming, is that the best use of those funds?
Yeah.
Now, because on a permanent buy down, you don't get any unused money back.
Sure.
You get a credit back on a temporary buy down if it's not all used up, but not on a permanent
Interesting.
buy down.
Yeah.
So.
And that, my friends, that answer is the reason why you want to have conversations with the lender and the agent, because that is the stuff that you don't know. And frankly, I always say I know enough to be dangerous when it comes to lending. Yeah. That's not my area of expertise. It's not your area of expertise. That's his job, and that is why it's so important to have those conversations with us. So if you are interested in having conversations, we would love to chat with you. You can either message us, direct message. You can text us, call us, email us. All of our information is there for you. So thanks, and we look forward to seeing you next time.